Hey, good afternoon, everybody. This is Jonathan Ruthier from CSNI, and welcome to our webinar. Today is a really exciting day for us here at CSNI. We've worked really closely with our presenters to put a little bit of a different format together for all of you today to really help to understand how stable New Hampshire accounts and special needs trusts work together and also coordinate with other public benefits that that folks have, and how we can make sure that people really have access to the right amount of supports and have the ability to save money for themselves, take care of their needs, and not risk their benefits. So we have a number of scenarios that we're going to walk through today that I think really illustrate the power of these tools and how they can be combined, how they may work independently, and how they coordinate with public benefits. So before we get started, I want to mention a few things just about our webinar today. So we are using Zoom webinar, and in this platform, if you're logged into today's presentation by computer, you'll notice if you hover over your menu that there's a little Q&A button, and that Q&A button is how you can let us know if you have a question. And if we have time at the end of today's presentation, the formal presentation, we'll try to address all the questions that come through there. So we'll be monitoring those as you send them in, so that if there's an opportunity to fit that question in specifically with something we're talking about, we'll try to do it then. But if we don't cover it during the formal presentation, then we'll certainly try to get to all of them before the end of today's webinar. Secondly, I just want to let you know that for all of you who have registered for today's webinar, we really hope that you will take a few minutes to respond to our survey that we'll be sending out afterwards. The feedback that we get from those surveys is really, really helpful to us in terms of both understanding how this content is reaching you, whether it's meeting your needs, and any ideas that you have for future webinar topics. So please take a few moments to send that in to us once you get the link from Heather Young. Lastly, before I introduce our presenters today, I just want to make it clear to folks that today's presentation is really for informational purposes only. And although we're really blessed to have some incredibly expert advice and professional experience in the room today, nothing that we'll be covering today should be considered a substitute for qualified legal advice. So the information in today's presentation is for informational purposes only and is purely hypothetical in nature. No attorney-client privilege or attorney-client relationship has been created, and no legal advice is being provided. And the hypothetical scenarios that we'll be reviewing today are not a substitute for receiving a legal opinion on your own special circumstances. No financial or tax advice is being provided by the Stable New Hampshire co-administrators in this handout, and no formal legal advice is being provided by our attorney partners at Butenhof and Bomster. So again, thank you for joining, and having clarified our role today and the limits of our presentation, I'd really like to just quickly introduce our four presenters, and then I will hand off so we can talk a little bit about some of the fundamental terms that we'll be using today. So you all can't see me, but to my far left is Bill Dwyer, who is the State Treasurer for New Hampshire. Welcome, Bill.
Thank you. Good afternoon.
Good afternoon. And to my immediate left is Chuck Saia, who is the Executive Director for the Governor's Commission on Disability in New Hampshire.
Hello, Jonathan, and welcome everyone to this program.
Thank you, Chuck. To my right is Ann Butenhof, who is an attorney with Butenhof and Bomster in Manchester.
Glad to be here.
Right. And her partner, Judith Bomster, is to my far right, and who's also an attorney with the firm Butenhof and Bomster.
Good afternoon, everybody. We're looking forward to today.
Great. So just as we get started, again, I want to remind folks, if you're listening, if you just joined us, if you have a question during the presentation, to use that Q&A button on your Zoom menu if you're logged in by computer. We're going to start off with a general overview of some terms that are going to pop up during our scenarios today. And to kick that off, I'm going to hand off to Ann to just kind of describe what are some of the benefits that we're talking about today, some of the public benefits that people may have that are involved in understanding how all these resources work.
Right, so I'll cover that, and then Judith will talk about special needs trusts. This is all very quick. You've done a much more in-depth webinar for CSNI that you could access on their website if you want further information. But so the reason that we're talking about stable New Hampshire and special needs trust is one of the primary points is to protect financial eligibility for people that are on public benefits that have resource or income guidelines. So, and many people depend on these benefits, and we want to make sure that we can identify for you quickly which ones are at risk because of having income and resource tests. So if somebody is on a public benefit that is needs-based, meaning that you have to meet the income guideline or the resource guideline, if they receive money, it can either be interpreted as income and knock them over the income limit, or it could be considered a resource if they keep it for a while. So whether they get a monetary gift from somebody, or they get a lump sum or structured settlement from a personal injury action, or they might receive an inheritance, any of these things could disqualify them, that person, from receiving certain benefits. And the other thing is that if you're on particular public benefits, you might not be able to just give your assets away in order to retain eligibility, or you might not be able to disclaim an inheritance, again, without it knocking you off benefits, at least for a period of time. So what benefits are we talking about? We'd like to just distinguish between the programs that are administered by the Social Security Administration first. If you're working, you're paying into the Social Security system, and you're creating credits for yourself, and at some point in time you earn what's known as an insured status. So if that's happened and you later become disabled, you'd be entitled to something called Social Security Disability Insurance, SSDI. This is in contrast to Supplemental Security Income, which is SSI, and they've made them so similar that people mix them up all the time. But Supplemental Security Income has nothing to do with paying into the Social Security system. It is purely based on whether you meet the definition of being disabled, which is the same definition as for Social Security Disability Insurance, and if you meet the necessary resource criteria and income criteria. The other two programs to distinguish are Medicare and Medicaid, and again, those terms are very similar. So let's see. The other piece I wanted to just quickly mention is that with Social Security Disability Insurance, you could have an individual on that program who never worked because their parent worked and they were disabled before the age of 22, the individual. So they're riding the coattails of their parents' work history. And that's, but it is a Social Security benefit for, and it's known as Child Disability Benefits, CDB. And then again, those do not have the same income or resource criteria. So it's one thing that we've learned is that it's very important for people to, for us as advisors, to actually look at the documentation of individuals to see what they're on. Because the terms are so similar, people often say they're on SSDI when they're on SSI, or they're on SSI when they're on SSDI, and there's just a world of difference. So I wanted to talk about Supplemental Security Income because that is the cash assistance program that is based on financial need. It's 100% federal. The state government does not run that program at all. The highest award someone can get through this program in 2019 is $771 a month. That's the full SSI check. To get that, the person must be disabled or blind or over the age of 65 with no work history. And they must be indigent as defined by the statutes, which they have to meet certain income criteria. And the income relates to both earned income and unearned income. And we'll talk about that just real quickly. And they can't have more than $2,000 in countable resources. So for unearned income, we look at things such as people just giving you cash. You didn't work for that money, but you have cash now, and that can affect how much money you'll get through a supplemental security income check. But also somebody could provide you with free room and board, so they could pay for your housing or give you free food. Because the supplemental security income check is designed to pay for just the subsistence of rent and food. If somebody gives you free rent and free food, then that's going to be considered in-kind support and maintenance, which is a type of unearned income, which will lower a check and affect, that relates to the income eligibility criteria. I know we're going really quickly, but onto Medicare and Medicaid. The Medicare program is tied to the Social Security program, and it is, again, an insurance. People pay it into the system. They pay their Medicare taxes that were taken out of their paycheck. They either qualify for Medicare by age or disability and having had adequate work history. So that program, like Social Security disability insurance, has no resource limit. And the only income limit is earned income. If you earn enough money, they deem you to be eligible to work and therefore not disabled. But anyone can hand you as much money as possible, which is unearned income, and it would not affect that program. So same as for Medicare. So for Medicaid, however, is based on financial need. It is a joint federal state program, and you have to meet the financial eligibility criteria. And you also, for the programs that we're talking about today, you would have to be disabled to qualify. Not all Medicaid programs have the same resource and income criteria, but they all have some criteria that must be followed. So it's important to know the precise Medicaid program that someone is on in order to determine how these rules relate to everything that we're doing. So with that very quick understanding of public benefits, that's what we're trying to protect through the programs that we're going to talk about today.
And just one quick question, because I think, again, there is a lot of confusion between SSI and SSDI. It is possible for somebody to receive benefits from both programs, correct?
It is very possible. So somebody could have a work history, but it's such a nominal work history that they're getting a very small check, lower than the SSI check of 771. So for instance, you could have a Social Security disability insurance check of $500 a month and therefore qualify for SSI to make up the difference, getting you to that $771. So it's, and again, sometimes people don't understand what they're getting at all. And so the way to start is to look at the specific notices that you're getting from the agencies.
Thank you.
So this is Judith. I'm going to dive in and talk a little bit about special needs trusts. And our hypotheticals that we're going to be going through in a bit are really designed to illustrate which bucket is the best bucket to draw money from, whether it's stable or special needs trusts. So excess resources and income, as Ann mentioned, are problematic for the public benefits that are based on financial need. Having too much assets and too much income could impair an SSI check or Medicaid eligibility. And excess resources and income are just simply irrelevant for benefits that are based on work history. They just don't matter for SSDI, Social Security, retirement, or Medicare. But special needs trusts are intended to help preserve needs-based benefits. They're intended to preserve assets, because assets held in a special needs trust, an irrevocable style trust, fully discretionary distributions from that trust asset, they're not going to be counted as resources to the trust beneficiary when applying or retaining that SSI and Medicaid assistance. Income that's directed to a special needs trust, say by a court order from a structured annuity or a child support payment, that's not going to be counted as unearned income to the beneficiary if it goes directly and irrevocably from the structured annuity company to the special needs trust. And if those trusts are administered properly, distributions coming out of that trust are not going to be counted as income to the trust beneficiary. There are just generally two broad categories of special needs trusts. There's a self-settled special needs trust, and that is a creature of federal law. It's a trust that's funded with assets that actually previously belonged to the person with disabilities. So if someone's already on Medicaid or SSI and they come into a lump of money from an inheritance because folks didn't look forward and do advanced planning, or if they settle a personal injury settlement, they have to tuck that money somewhere. And Bill and Chuck are going to talk about tucking some of it into stable accounts. But if there's too much money at hand, they have to be utilizing a self-settled special needs trust for the rest of the assets. Third-party special needs trusts are for when people are doing good advanced planning and they're setting aside assets for a loved one with disabilities. So they're often part of a general estate plan that families put together, and the funds that go into those types of special needs trusts never belong to the beneficiary themselves. They never control the assets. Self-settled special needs trusts have to have a Medicaid payback. It's what folks have to give up, and in exchange for staying on benefits, they have to repay Medicaid at the end of the day if they're going to tuck their money in an irrevocable trust and stay on those essential benefits. Third-party special needs trusts, no Medicaid payback at all. So advanced planning is really helpful. As I mentioned, although funds in this special needs trust are just ignored as countable resources for programs like SSI or Medicaid, money coming out may or may not impact the benefits. So the trustee that is running those special needs trusts really just has to understand what type of distribution is being made and what are the eligibility requirements for the benefits that person actually is on, what income rules apply. And we're going to talk a little bit, Ann mentioned the differences in the different types of income for when that the public benefits agencies count. Unearned income is the one we're really going to be looking at in our hypotheticals. That's when someone's receiving money from another person, from a trust, whether it's third party or self-settled, or whether they're receiving shelter help. And we're going to be fleshing those out in our hypotheticals as we go along to figure out, is it better for that money to be coming out of a stable account or from a special needs trust? Cash paid directly to a special needs trust is really going to be a problem. We're going to flesh that out also in our hypotheticals. To a beneficiary is going to be a problem. And if a trust purchases food or shelter, we're going to figure out better ways to make that happen and not use trust funds to do it. So I think I'm going to just hand it off because we're going to talk. There's other information on the web, CSNI's prior webinars about how to use special needs trusts. So you could check out that detailed information there.
That's great. Well, thank you both for the overview of the benefits and the special needs trust information that we'll be covering in our scenarios today. And now I'm going to turn to Chuck to give us again just sort of a recap of the Stable New Hampshire program and what those accounts are set up for and how they work.
Sure, by all means. Thank you, Jonathan. And obviously, I thank Ann for that great recitation of benefits, and as well as Judith for the explanation of S&T Special Needs Trust. And what we see here is what we're doing is we're empowering you to really have a toolbox that's in front of you that you can draw on. I am the co-administrator of Stable, New Hampshire with the State Treasurer, Bill Dwyer. And what Bill and I have coined, Stable, New Hampshire and able accounts in general are truly a game changer. Because in 2014, when the federal legislation was passed, that's truly when the landscape changed. That was the federal government's decision to look to the states and essentially say, we know you have special needs trusts, and we know you're working with CPAs, you're working with financial planners, and you're working with attorneys. But now we're going to go one step further. And we're going to create this vehicle similar to college savings plan. Because essentially what the federal government did is they leveled the playing field. For years, parents had the ability to save tax-free with college savings plans. And the history is it's like individuals like yourselves, parents and advocates that were on the ground essentially banging on the door of the federal government saying something has to be done here to equalize the playing field. And hence, we now have the ABLE Act, which was passed in 2014, and in 2016, Stable, New Hampshire, well, actually, New Hampshire rolled out its legislation, which allowed the creation of an ABLE savings account program. And in December of 2018, 17, excuse me, I'm getting confused, we're at it a year and a half now, New Hampshire has its own program. So Stable, New Hampshire, obviously there's much information that you can find on the website at stablenh.com. That is New Hampshire's ABLE savings program. That is the program that the legislature, the governor, and the executive council have essentially put their good housekeeping seal of approval on, so that individuals can now save money without risking SSI or Medicaid. The rules regarding $2,000 essentially have been changed. And we know that all of you, benefits planners, parents, family members, friends, have essentially lived under this fear that you couldn't have more than $2,000 in an account. But with a Stable New Hampshire account, you can now have that. So that is the overall goal of a Stable New Hampshire account, is to ensure, working with financial planners, working with attorneys, to ensure that Stable New Hampshire and Special Needs Trust, they're not exclusive. They actually work in hand. And that's what the scenario is about today. And I'm going to pass it over to my co-administrator, Bill Dwyer, who is the New Hampshire State Treasurer, and he can go a little bit deeper into Stable New Hampshire.
Thanks, Chuck. And I also want to thank Jonathan and Heather for hosting the webinar and CSNI's efforts to bring us together to share this information with those who can benefit the most. I also want to thank Ann and Judith for those explanations of the benefits themselves, as well as the different aspects and types of special needs trusts. This is not an area where, as the state treasurer, I have a great deal of expertise. So to some extent, I'm sitting here as an attendee in the webinar as I am a participant conveying information. So I may come out of here with an honorary law degree as a result of absorbing the same information that you're hearing.
We'd be happy to confer that on you.
This is good. So again, piggybacking off of what Chuck said, the federal legislation ABLE stands for Achieving a Better Life Experience. And as he noted, in 2016, New Hampshire's legislature enacted the local program that the state would sponsor. One of the things I want to emphasize, and we talk a lot about the tax advantage benefits of owning a Stable NH account. And one theme that I want to try to drive home very early, and we may touch upon it later as we look at different scenarios, is that a Stable NH account is designed to accomplish a couple of things. Number one, as Chuck said, it doesn't jeopardize those federal benefits that people are receiving. Number two, it makes it possible to accumulate wealth for people who in the past were not able to do that. From a tax standpoint, the benefit resides in the fact that after-tax dollars are what go into the Stable NH account, but it's the growth as a result of different types of investment selections and designations in the way the Stable NH funds are invested. Those funds can grow, whether it's through interest, dividends, capital appreciation. They grow tax deferred, just as you would see with a college savings account. And as long as distributions are taken for qualified disability expenses, and again, that's a theme that we'll talk about through different scenarios here, but as long as the distributions are taken for qualified purposes related to the disability, then the gains that have accrued into the account over time do not generate capital gains tax. So we've been out on the road quite a bit, and there's been a little bit of a misperception that that pre-tax funds can go into a stable account, and then it gets a little bit muddled from there. But the fact is that, as with the college savings account, after-tax dollars go into a stable NH account, but then they grow tax-deferred and tax-free as long as they're used for a qualified purpose. So that's probably about all I want to say. I think we should jump into the scenarios now, and I think a lot more information will emerge as we talk about those.
Yeah, that's great. And thank you all for the overview. I think, and for those of you who are new to our webinar series, we've mentioned it a couple of times, but you can go to www.csni.org and look for our prior webinars under the link that says pre-recorded webinars to find out further detailed information on both the stable NH program as well as special needs trusts and guardianship. So we're going to advance our slide here, and again, just as a reminder for for all of you who are watching, this is who's speaking today. And we have a number of scenarios that we've put together for you, so we can really kind of dive in on an example basis that in a way that really helps to illustrate, okay, well, who, if, what aspects of each one of these situations might apply to me, and we really tried to develop some scenarios that would be pretty common, and that include a combination of things. So I think without further ado, we're gonna just jump right in, and we'll start with the first scenario. And so for this scenario, just as a reminder, all of our hypothetical cases here are truly hypothetical. These do not represent actual individuals. So we're going to talk about Sam today. And so let's assume that Sam is 30 years old. He has a disability that has been present since birth, and he's not earning any wages or income of any kind on his own. He lives independently, and he receives a full SSI, supplemental security income, of $771 a month. Now, just remember, because he's never worked, he's just not qualified for SSDI. He's receiving SSI of $771 a month. But that amount is insufficient to cover all of his expenses, which would include food, rent, and other living expenses. He's also on the Medicaid program through his own medical eligibility, and he's not a part of the Medicaid expansion program. So we're going to review a number of scenarios related to Sam here. And so the first one is that, so let's imagine that Sam's mother wants to help him out and increase his funds by an amount of $800 so that he can afford a better apartment in a safer neighborhood. So let's look at what are some of the ways that Sam's mom can pay rent for him or set up money that that he can use. And what are the impacts of those various options on Sam's financial eligibility for his public benefits? So I think I'm going to turn to Judith to kick us off.
Sure. So if Sam's, the first option we wanted to talk about was, what if Sam's mother wants to deposit $800 each month into Sam's checking account? A check into an account directly is just like cash in hand to Sam, and cash in hand is always going to be a concern. That deposit is going to be treated as unearned income to Sam, and it's going to eliminate Sam's SSI check dollar for dollar. And there's going to be a little $20 disregard, but really that SSI check of $771 is effectively going to be wiped out, and that's a critical loss. Medicaid also is going to count that deposit as unearned income to Sam toward the income limit for the Medicaid program that he's on. And depending upon what that income limit is for his Medicaid program, he might actually have to have a monthly spend down in order to stay eligible, or he might actually lose Medicaid as a result of his mother trying to do a good deed.
So this is all really resulting from the fact that these funds are being put into an account that's in Sam's name.
Or cash just given right to him.
Right.
Okay. So obviously with this, this is just one option, right? So what's another option?
So another scenario would be that Sam's mother decides that she's just going to pay Sam's rent. She's not going to give Sam the money. She's just going to pay the landlord $800 a month. What happens here is that this is the in-kind support and maintenance that I referred to briefly in my comments. This is paying for housing. And since the supplemental security income check is designed to pay for housing, then someone else paying for it is going to reduce your check. What's really good about this compared to the scenario that Judith commented on is it doesn't reduce the check dollar for dollar. It reduces it by a maximum of 1/3 of whatever the current SSI rate is that year. And this year, 1/3 is $257 a month. So that's what's going to happen to SSI. It's reduced, but only by 1/3. In the Medicaid area, this is considered in-kind income. So it's just a different, they don't use that term support and maintenance or ism. It's just in-kind income. And he might have a monthly spend down or deductible as a result, depending upon the Medicaid program that he's in. So you have to determine what the income limit is of the particular program, but it is going to be considered in-kind income, but it may not knock him off of Medicaid depending upon what that limit is. And just as a side note, the Medicaid program in New Hampshire is supposed to be following the same rules as the SSI program, and therefore it should never count $800 any more than $257. They're only supposed to count it by a certain amount, and we're not sure if New Hampshire's really following that rule or not, but they're supposed to. So then we have a third.
So both of these first two scenarios really kind of show how direct payments can, or cash handed over can really impact somebody's benefits almost immediately.
Right, absolutely.
And indirect support.
And
Indirect
Second
support
case.
and maintenance, right,
Right.
Right.
And it really boils down to the fact that that SSI check is designed to pay for the basic necessities of food and shelter, and both of these illustrations are about helping with shelter costs.
So we then want to talk about how this would be if we had a special needs trust involved. So in this case, Judith is going to talk about the scenario where Sam's mother is a trustee of a special needs trust for Sam and makes a trust distribution to pay for rent.
So as I mentioned earlier, the starting place is the funds that are sitting in that special needs trust. When they're sitting there static, they're not going to count as a resource for SSI and Medicaid. So the real trick is to use them properly and when they come out, because special needs payments paid to Sam directly could have a result on the same result as his mother giving him rent directly. So the payments from that special needs trust to Sam directly, whether it's deposited into his account with a check or whether it's cash in hand that he can give to the landlord and get a receipt from, that's going to eliminate Sam's SSI check dollar for dollar. Whether it comes out of the special needs trust or whether it comes from his mother directly, the result is the same. And Medicaid also is going to be counting that deposit as income to Sam, just like it did when the mother put the money into the checking account. And so he's going to, depending upon the income limits for his Medicaid program, have either a spend down or it might not affect his benefits at all, but it's up to the trustee to really understand the income limits for the Medicaid program he's on before making that kind of distribution. Payments from the special needs trust to Sam's landlord only. If the check was cut directly from the trust to the landlord, that's going to have the same result as the scenario Ann just described. It's in-kind support and maintenance, and the maximum it should reduce Sam's SSI check is by 1/3, by $257.
So the real message from this is that payments from a special needs trust for housing and food are the same as an individual making those payments for housing and food.
Exactly.
And that's going to lay the foundation now for comparing it to stable.
Yep.
Yeah.
Thank you, Ann and Judith. And again, this is where we're going to talk about how the stable NH account can be used in concert with the special needs trust to some extent. So in this instance, we're going to talk about Sam's mother having opened or opening a stable NH account as his authorized legal representative, guardian, or parent. That individual opening the account has to be in one of those three roles if the individual with the disability is not opening the account themselves. So she's going to go ahead and open the account, and then immediately after that, she'll contribute $800 a month to that stable NH account. Again, whether it comes from a distribution from the special needs trust or whether she's doing that from other funds that she has available. And Chuck is going to go ahead and talk about some of the considerations or outcomes that result from that.
Well, thank you, Bill. So in this situation, so again, we have the mother contributing the $800 right off the bat. That in and of itself is, again, one of the powerful, what I would say, description of stable New Hampshire. So the payment to the stable New Hampshire account of the $800 will be not counted as income to Sam. And again, this is where his SSI check will remain intact and it doesn't jeopardize those benefits. So you have the deposit going in. And again, with a stable New Hampshire account, anyone can deposit to that account for the benefit of Sam. Now, we then turn to the payments out of the stable New Hampshire account. So the use of the stable New Hampshire funds to pay Sam's rent directly will not count as income, and again, will not jeopardize his SSI check. When Bill and I obviously speak about stable New Hampshire, we talk about qualified disability expenses, like QDE. This falls within the realm of a qualified disability expense. So ultimately, the $800 a month that was deposited into the stable New Hampshire account will not count towards SSI and Medicaid income or resource limits. So again, what we see, the power of the stable New Hampshire account working independently and, as importantly, in conjunction with special needs trust. So we do, but Bill and I will get questions. How does he get the money out of a stable New Hampshire account? Well, he can do a transfer from a checking or savings from the stable New Hampshire account. He can request a third-party check to be issued to pay for the rent. And lastly, should the landlord accept it, he can use his stable New Hampshire preloadable debit card to actually pay for the qualified disability expense.
Can I make one comment? One reason why a stable NH account is available to Sam is that he was disabled before the age of 26. And I just wanted to make that, that point. So in this case, we know Sam was disabled since birth. And unfortunately, stable can't be used for someone who developed a disability after the age of 26.
Yeah, that's a very good point, Ian. And we know in one of the other scenarios, we actually have that as a knockout where unfortunately the 26 age limit is not available. Yeah.
So, Bill or Chuck, am I correct that, the money can come out of the stable account and let's say it went into Sam's checking account. Am I correct that he has to use it in that month to pay the rent? What happens if he holds it longer?
It's counted as a resource.
Correct.
If those funds held outside the stable account, and again, he crosses over into another month, now it's a resource.
Yep.
So it's very important from a timing standpoint that the distribution, again, ideally it would come out of the stable account and go directly to the landlord one way or the other. But to the extent, for whatever reason, Sam needs to hold it in another account temporarily, and we hope it's really temporarily, those funds have to be dispersed from the other account prior to the month turning over. Otherwise, they do get counted as a resource. And one other fundamental aspect of stable NH that this is a good opportunity to mention is, we're talking about $800 a month. If my math is right, that adds up to almost $10,000 a year. It's important to be aware that there is a contribution limit on stable NH accounts for each calendar year, and that limit is $15,000. So that amount is consistent with the federal gifting limit for federal income tax purposes. So every time the IRS or U.S. Treasury raises that limit, then the contribution limit in a stable NH account will go up. But it is important to note that the maximum that can go into a stable NH account in each calendar year, where we are today, is $15,000. Once you hit that limit, no additional funds can be deposited, but funds that are already in the account can continue to be used for other purposes. And again, the earnings that are generated on the balance those themselves can drive the balance over 15,000. It's just the amount of contributions going in that have to be held to that limit.
That's great. Yeah, and if I may, Jonathan, first and foremost, Judith, thank you for pointing that out, because you are right. What Bill and I consistently say is if it's going to, if you're using the funds in a stable account to pay for rent, use them immediately.
Yeah.
Don't sit on it. So that's a great point.
If it goes into your checking account.
Correct. If it goes into your checking
I guess
account,
it
that's
can
right.
stay
Well, that's right. You can stay in
stable.
stable. Right. That's right. And they can
But
pay it.
timing is important.
It is.
It's
really
It's
important.
critical. Yeah. And Bill, just to follow up, and that's excellent that you brought out the fact that it's a $15,000 limit. That's an annual limit. So in other words, theoretically, you could have contributions by October 31st, totaling $15,000. But on January 1st, that contribution opens up again, because all contributions to a stable New Hampshire account are on an annual basis.
Good point.
So this first scenario was really about kind of highlighting, the different methods that somebody could use to supplement somebody's regular monthly income in order to help to defray regular monthly expenses.
Truly rent.
Truly rent, right. And so we're gonna advance a little bit into a little bit more of a twist into the next scenario, where we're still looking at Sam. So just as a recap, Sam is our hypothetical young man, 30 years old, with a disability since birth, living independently, doesn't have his own earned income from wages, and receiving SSI of $771 a month. And so in this scenario, let's imagine that Sam's mother she wishes to purchase a home for him. And she wants to also contribute to what we call the carrying costs of the home, which would include the real estate taxes, the mortgage, the insurance, the utilities, just all the monthly payments that are incurred as a result of owning a home. And because Sam's SSI check is not enough to cover any of those expenses. So what we're going to do here is sort of look at what are some of the different options for how the home should be titled, meaning, what entity should be holding the title for the home, or layman's, should it be a person or a trust, and what are the different options for taking care of those carrying costs, and what are those various options, how do they impact Sam's financial eligibility for his public benefits. So hang on, folks, we've got a lot of stuff working in this one scenario, so we're going to walk through this step by step.
We'll unpack it.
Okay, great.
Okay, so the first option is the mother owns the home. And so Judith is going to cover this option. Oh, actually, this is me.
It is you.
It's Ann.
You can't see us pointing fingers.
That's okay.
All right, that's okay. So the mother is not charging Sam rent and pays all the carrying costs. So we're going to go over different reasons that the mother owns the home. So the first time, she doesn't charge rent and pays all the carrying costs herself. Okay, so this again is in-kind support and maintenance for SSI. So it is going to reduce Sam's SSI check by 1/3, or $257 a month. And the Medicaid program also is, what's interesting about this, they don't consider a person giving you a free room as in-kind income. So that's not going to affect Medicaid at all. Now, so let's go to the next hypothetical would be that the mother charges Sam a fair market rent, but first she puts it into a stable New Hampshire account for Sam. So what would that do, Chuck and Bill?
In that case, and thank you, Ann, for that introduction. It's an interesting scenario, and it really shows that there are smart, savvy ways to use a stable NH account to provide for basic living expenses for the person who is the beneficiary of the stable NH account. In this case, having Sam's mom, in the first place, contribute those dollars into the stable NH account is permissible, as we talked about earlier. They're not counted as resources. But now Sam, in effect, can go ahead and disperse those funds to pay the rent back to his mother, who owns the home. And it's all legal and legit. And this is, again, I think one of the outcomes that congressional legislators had in mind when they were looking at the benefits of the ABLE legislation for those who, again, weren't previously operating on a level playing field, as Chuck says. So again, as I alluded to, the money coming into the stable account is not a resource. It's not income to Sam. The money going out, back out, and right back to Sam's mom for the rent is not a resource. It's not income. And this is a good opportunity to talk about what we call QDEs, qualified disability expenses. I mentioned earlier on that as long as the distributions out of a stable NH account are used for what are considered qualified disability expenses, there's no capital gains tax on the earnings that were generated by the investments that were held in the account. What are qualified disability expenses? At a very high level, any expenses that either help maintain or improve health, independence, or quality of life that in effect relate to the disability are qualified disability expenses. And certainly if Sam is being given independence by virtue of renting this apartment back from his mom and paying her the rent, the utilities, the property taxes, the insurance, whatever it is, all of those inure to his independence given the disability that he has. So these would all qualify, and the payment of this rent and the other carrying costs would indeed qualify as a QDE, and therefore there would be no capital gains consequences associated with the funds that are withdrawn. And again, the money does not count towards any SSI or Medicaid resource limits. The one qualifier I would add is that once, and for many people this wouldn't happen for a very long time because of the annual contribution limit, but once the balance in a stable NH account reaches 100,000 and then exceeds it, at that point, Medicaid benefits are suspended.
No, it's only SSI that's
SSI.
suspended.
Thank you.
Medicaid
Okay.
is tied to the 529.
Okay, thank you for that, Ann. So again, as soon as the balance in the stable NH account were to exceed $100,000, the SSI wouldn't be completely eliminated. It would simply be suspended or frozen, and then the balance in the stable NH account would need to be brought back down below 100,000, and at that point, the SSI benefits would resume again. Chuck, I don't know if you want to add anything to that.
You know, I do, if I may, Jonathan. Just following up with qualified disability expenses, you know, Bill, you had a great description and given an idea of what a qualified disability expense. So we do receive these questions often. It's sort of what I refer to as a two-pronged test. What is a QDE? Well, number one, the expense has to be related to the disability. And secondly, it has to help maintain or improve health, independence, or quality of life. When Bill and I are explaining this to the citizens of New Hampshire, that's a very subjective description of what a QDE is. And ultimately, I believe that, and I would suggest that inures to the benefit of everyone that has a stable New Hampshire account. It really looks at the intent of the federal legislation and the intent of stable New Hampshire to really have a very subjective determination that is made by the individual as to what a QDE is. I also wanted to point out, and obviously when it comes to a ABLE account, what we refer to as a stable New Hampshire account, the stable New Hampshire account is always owned by the individual with the disability. Again, very powerful. Bill had hit on it when he used the term independence. When you look at a stable New Hampshire account, we're ensuring that individuals with disabilities are empowered. We're ensuring that they gain their independence. We're ensuring that they actually can make decisions if they're in a position to make their decisions. So in this scenario, and we see this question often, mother and fathers own homes, can they charge their kids rent? Well, with a stable New Hampshire account, even though the parent is actually funding the account, they're actually charging their son or daughter with the disability rent, and he or she can by all means, legitimately pay rent back to the mother or father who owned the home. So again, when we look at special needs trusts and we're looking with stable accounts, there's an incredible interplay that is occurring here. And it's an incredible toolbox for the individual with a disability and their loved ones.
So,
I think you had a question.
Nope.
okay, great. So, so in that first scenario, we're looking at, basically mom owning the home herself, you're purchasing the home, but it's in her name, right? So, and there may be pros and cons to that for her benefit, or, for her son. So, but another option here is obviously to purchase the home under the title of the special needs trust. And then, you know, assuming that there is one already established, or you could probably establish one in the, you know, right in the process of
Yeah.
you know, acquiring the asset, right?
Yeah.
So, so how would that look, Judith?
Yeah, so first and foremost, if the mom wanted to purchase the home, she certainly could purchase it in a special needs trust. It would be a third-party special needs trust because that home never previously belonged to Sam. You know, once that trust owns the house, paying the carrying costs is usually the first question out of the parents' mouths, and how the payment of carrying costs are treated if a trust owns the home itself is a little different between SSI and Medicaid in New Hampshire, at least. So, you know, if that special needs trust is going to be paying the utilities and the real estate taxes, if it's going to be paying for the upkeep of the house and to keep it warm for the beneficiary, then that's in-kind support and maintenance that's being paid by the trustee for shelter costs for Sam. And as we already mentioned, Sam's SSI check is going to be reduced if he's receiving assistance with shelter costs from a third party, including a trustee. But it's only going to reduce his SSI check by a third, not by the total amount of the carrying costs that trustee has to pay to carry that piece of property. When it comes to the Medicaid program, however, you know, Medicaid in New Hampshire, and Medicaid is a joint state and federal program, so this rule is going to differ state to state. But in New Hampshire, if a trust owns a home, the trustee can pay the carrying costs for that property to ensure the property's safety without it being considered in-kind support and maintenance for that beneficiary. You know, a stable account, as Chuck and Bill had mentioned, it can't own a home. It can't own that real estate. But the mom or the special needs trust could funnel some funds over into the stable account. And I just sort of wanted to pass this off to Bill and Chuck and say, how can we really show how stable accounts and special needs trust can work together really well here to maximize his SSI check? So what if there were funds in the stable account and the house was owned by the trust? You know, are there ways to keep Sam's SSI check at its maximum?
Well, if I may, Bill, it would seem to me that if the monies that are in a stable account can be used to pay for utilities or real estate taxes. Mm-hmm. So again, following, and I actually would turn a question into a question, yeah, because we have these scenarios. Yeah. How would a trust get the funds over to a special needs trust? In other words, how would, to a state, stable NH.
Great question. So
does it have to be a certain recitation in the document that allows for that, or a court order, or what?
That's a great question. So we actually have, you know, in our trust, once stable NH was off the ground, and even before when we knew it was coming, and we had the legislation on the books in New Hampshire, we had modified our trust to authorize trustees to fund stable accounts.
Wonderful.
And they have to do some due diligence beforehand to make sure, you know, that there's one created, what are the contribution limits. But, you know, now the special needs trust can actually seed the stable account with funds, working with families to make sure that it's being done in a timing perspective that works for the beneficiaries. And my recollection when we were working with one of our clients is that Stable New Hampshire makes it super easy for trustees because an e-gift request was sent right to the trustee. They were able to click on a link that's embedded in an email, and the trustee was able to electronically transfer funds from the trust to the stable account. And it was seamless and so helpful for the families, how the stable program has set it up.
But you could see an old special needs trust that has language that makes it an outright prohibition to give the money to the trust beneficiary. You know, giving it to a New Hampshire stable account is giving it to the beneficiary.
Correct.
So, so there could be a scenario with certain trusts that we would want to see them modified, and even though they're irrevocable, there are ways to address that kind of a problem.
Yeah.
So
our state law allows for modification of trust to improve administration, and this would be an ideal scenario to improve the administration for the beneficiary.
I will tell you, I commend both of you.
It's a great question.
You're ahead of the bell curve. I mean, so as soon as the legislation passed, you went in there and ensured that your special needs trust now encompassed stable.
Yeah.
That's very forward thinking.
And
Again, I
beneficiaries
applaud
move
both
from,
of you.
thank you.
Yes.
Yeah, beneficiaries move state to state. So
Of
there were,
course.
once
Ohio was up and running, you could have folks even before New Hampshire was, had partnered.
Right.
People could have had a beneficiary in a different state with an able account.
Judith, you really bring up a good point, and I think this again sort of comes up a lot for people, is that, laws are different from state to state, right? So trust laws are different in New Hampshire than they may be in Massachusetts or Connecticut or Maine. And so
And Medicaid laws are different.
And Medicaid laws are different. And so,
Yeah,
very much so.
So a lot of, pretty much everything we're talking about here today is based on New Hampshire's statutes, and how these programs are established in New Hampshire, including the statutes that govern the trust. So if somebody has a special needs trust that was set up in a different state, it may have a different look and feel, right? And so somebody would really need to sort of have somebody take a look at that and say,
We always do recommend when
Really
people
too
move
much.
from state to state that they get an attorney in that other state.
Smart.
Look
Yeah,
at
that's
documents.
wise. Yeah, that's great
Just to
advice.
see.
I also wanted to hit on, and I know Judith, you had talked about, because again, that's a great testimonial, and it's the first time I heard of it, when the trustee actually e-gifted the money
Yeah.
over to stable NH. That's powerful.
it was seamless.
Yes, that's right.
It was seamless.
Because the e-gifting feature, as Bill and I constantly speak about, it's one of the more powerful tools for a family member. And now I'm hearing from a special needs trust.
Right.
This
right.
is awesome.
Well,
Yeah.
I think the two of you, Bill and Chuck, you guys, you vetted a lot of the different programs and chose really wisely, because I think the platform and the partnership with Ohio has so many features that are helpful to beneficiaries and trustees and families. Good job.
Well, thank you. And
Yeah.
again, we, between the time the local legislation was enacted and we went ahead and launched, we looked at the national landscape, and there are a couple of different multi-state platforms that existed, but in just a quick order here, Ohio had the lowest investment management fees, and they expanded their call center, not just by adding more college savings reps, but they added those in the call center who were accustomed or trained to deal with those who have disabilities. So for those reasons and many others, we really saw it as the ideal fit for New Hampshire to partner with.
That's great.
No, that's
And-
great.
I did want to cover one thing before we left the special needs trust arena here, owning the real estate, is that if, since a beneficiary of a special needs trust is disabled and is the sole beneficiary of that trust, then the trust could apply for a disability real estate tax exemption if the particular town permits it. So the same scenario that Judith was talking about, that trust actually owns a home as well, and we were able to get a disability tax exemption for Manchester. But not every town has.
Not every
one.
It
municipality
was
has
significant,
Huh.
over
No, it's
100,000.
Yeah,
Very
over
good.
100,000 from the
Very cool.
value of the house. So that's
Well,
important.
that's really significant.
And I would just piggybacking on what Ann said too about the form of ownership of holding the ownership of the property, the home, as we've noted here, stable NH accounts, the only assets that can go in is cash. And then the cash, of course, is invested in different types of investment portfolios, different stock and bond funds, or a bank FDIC insured option as well. But real estate cannot be contributed into a stable NH account, and nor can a stable NH account even hold real estate. So that's an important distinction. And again, another example of how the special needs trusts and the stable NH accounts work in tandem together very, very well for the benefit of those, who need added or maybe have a more complex financial situation and certainly have resources available but have never been able to deploy them without jeopardizing their benefits. So this is, again, a great way that these two vehicles work in tandem with each other.
That's great. So let's look at a different scenario for Sam. So let's say that Sam's grandmother wants to leave him an inheritance, right? So and assuming this is a cash inheritance, and we have in our scenario here about $50,000. What are the different ways that Sam's grandmother could set up this inheritance so that whether the disposition of her assets they can be set up to protect Sam's benefits.
So just the starting place really is that if she's going to leave funds directly to Sam and he's on SSI and Medicaid, that's going to have a direct impact on his eligibility. If he's on SSI, he can only have $2,000 in countable resources unless those funds are sitting in a stable account or a special needs trust. So that money, that $50,000, for purposes of SSI, it's going to be considered unearned income. It was a windfall. And it's going to be affecting income in the month of receipt. So he's going to lose his SSI check. And if he holds the money in his own bank account the following month, it's a countable resource and he's over the $2,000 limit, plain and simple. From a Medicaid perspective, the fact that he gets the money in the particular month, it's not going to be counted as unearned income, but he has the same issue. It's going to be a countable resource if he holds it the next month. So again, as we were talking about earlier, timing is really critical, and advanced planning would be helpful for grandma.
So let's say that grandma does this, gives him the money, and now Sam's got the money. What can he do? He's got the money. Now what? Well, Sam could use the money to purchase non-countable resources. He could buy his own mobile home if he could find one for that price. He could buy a car, he could buy furniture, he could buy computers. So he's buying things for himself with his money in that month. He'll lose his SSI as long as he still has more than $2,000 the following month, but it's possible that it will only be affected by 1 month because he's purchased things that he's allowed to purchase. The other option that he has is he could create his own self-settled special needs trust. This is the kind of special needs trust that has that Medicaid payback provision. But the federal law expressly allows Sam to take his own money and put it into this special kind of special needs trust, and it will no longer count as his towards the resource limits for Medicaid and SSI.
And then a third option that's available to Sam as well is that depending on, again, how much up to that time had already been deposited into his stable NH account, up to $15,000 out of that $50,000 that was left for him, up to $15,000 could be deposited into his stable NH account and not, again, be counted as a resource. And
it's available to him in a way that a special needs trust money is not.
That's exactly right. Those funds are completely accessible for, again, our broad definition of qualified disability expenses. So whether it's education, transportation, we talked about independence, things that are related to the disability, assistive technology, et cetera, all of those expenses can be paid for out of the stable NH account.
So those are great planning options that are available to him. And in our scenario, Sam lives independently, but that doesn't necessarily mean that he's not under guardianship. We actually hadn't raised that in our hypothetical because he might or he might not be for any given family unit. But if Sam doesn't have the capacity to do the planning and tuck things into the ABLE account or create the ABLE account or to create the self-settled special needs trust in particular. And if he hasn't signed a power of attorney during his lifetime where he delegated that authority to a trusted advisor or family member, then a guardianship would be needed because effectively if the money is getting tucked into us, particularly a self-settled special needs trust, that's estate planning. And the only one who can do estate planning is the person or an agent or the guardian. So there might be some hoops families have to jump through in order to make the planning useful.
So let's say, instead of giving, gifting the money right to Sam or having the cash go right to Sam, let's say that Sam's grandmother decides to leave the funds to a third-party trust, a special needs trust that she sets up for Sam's benefit. How does that work?
Jonathan, that's the gold standard, right? That's the advanced planning that we want everyone to be doing. So the payment of that inheritance, as long as it never went to Sam, as long as he wasn't named as the beneficiary of that inheritance, but the special needs trust was listed under a will or under that grandmother's revocable trust, then that money going to the special needs trust is just not unearned income. It's not going to impact his SSI. It's not going to impact his Medicaid. And if it goes into that third party special needs trust, because Sam never owned it before, there's no Medicaid payback the way there would be if he needed to put his own money into the special needs trust. Then there would be a Medicaid payback. So under this scenario, the grandmother gets to decide where the money goes at the end of the day, years down the road, if anything's left, if Sam passes away. She gets to choose and control the inheritance.
Right. And for purposes of a stable New Hampshire account, Grandma may transfer some funds, again, with the annual contribution limits, to a stable New Hampshire account that was previously established. However, with stable New Hampshire accounts, there is a Medicaid payback, should that be something that the state is looking to enforce. But as far as Medicaid payback goes, as it pertains to stable New Hampshire accounts, the Medicaid payback only looks back as to when the stable New Hampshire account was established. So anything prior to that is not part of the stable New Hampshire possible Medicaid payback.
So let's imagine, so first of all, that's really helpful to clarify about the payback provision, because I think that's, it's an important planning, it's an important bit of information for planning down the road. So we're going to just kind of jump to our next scenario. And fortunately for Sam, he has a really wonderful, generous family.
And wealthy.
And wealthy.
Plenty of assets.
All different types.
Who are all wanted to help him along in his life, so he has a good life. So let's look at a scenario where Sam has an uncle that wants to leave him $15,000 in the form of stock. Okay, and so again, just to clarify for folks, we're talking about shares of companies that are owned by his uncle, and he wants to gift those shares to Sam. What are the various options that he's got?
Well, in terms of a stable NH account, it's somewhat limited unless he wants to liquidate the stock. And I'm definitely not going to give investment advice here because the stock market fluctuates.
And for our non-financial listeners, liquidate means he would have to sell those shares, convert them into cash, and then transfer them to
deposit them in. Exactly. So, as we're mentioning here, a stable NH account cannot be funded with investment securities. If someone has some other type of a tangible asset or investment securities, and somehow they want to get the value of that into a stable NH account, it would result in their having to sell, convert it to cash, and then at that point the cash can go in. But I think we may have a vehicle that will allow for the stock to find its way to him.
So again, there could be a third-party special needs trust, and it might be that this was the grandmother's trust and the uncle may want to tie into that. Or it could be one that the uncle creates himself, and a special needs trust can own stock. And it's retitling it. It doesn't count as unearned income to Sam, and it's not a resource to Sam for SSI and Medicaid purposes. So that's a really good option. It's just simply retitling it. It can be, you don't have to do it at your death. The special needs trust can be, a third-party special needs trust can be funded during lifetime. And once one's created, all kinds of people can fund it, just the same way that a stable NH account can be funded by anybody. So once there's a third-party special needs trust available for Sam, then the uncle could just go ahead and put it right in there, retitle it.
Yeah, that's a really good point. He'd have to like his grandmother's, the grandmother's ultimate distribution plan, though.
That's true.
It might differ. So as long as everybody buys into where the funds go when Sam passes away, using the same bucket to put the assets in is a great idea.
And how about just leaving the stock directly to Sam?
The stock, even if it's in just a certificate form, has value. And just like it could be sold and liquidated for cash, it's got a value whether it's in certificate form or not. And for SSI, the receipt of that stock, the receipt of that value is going to be unearned income to Sam. and it's going to be counted as unearned income in the month that he gets it. And if he holds it into the following month, just like if he held that $50,000 into the following month, it's going to be a countable resource. For Medicaid, the same scenario. The receipt of that stock is not unearned income, but Sam better do some planning with that stock in the next successive month, or it's going to be a countable resource, and it could put him over the resource limits for his particular Medicaid program.
So again, he could put it into a self-settled special needs trust. He could liquidate it and buy things. He could liquidate it and put it into a stable NH account.
Yep.
Yep. So he has all the same options available.
But I think it's important that if he receives it, maybe the uncle could have timed it properly so he got it on the first of the
That's a
month,
good
and it
point.
gives him 30 days to spend it down.
Perfect.
But he has to spend it in the month in which it's received, not just 30 days from the date he receives it. And that's something really important
For
to keep
SSI,
in mind
right.
for SSI.
That's a really important point. So
We're going to leave Sam.
we're going to leave Sam. We're gonna leave Sam.
He's
Um,
well tended.
Sam,
He is.
I think we've taken really good care of Sam today. But what's important for folks who are listening in to understand is Sam. What Sam's scenario presents is really a lot of different common situations, right?
Mm-hmm.
And so for folks who are born with a disability or acquire a disability at a very young age, Sam's circumstances are really common. And so we're gonna leave Sam's scenario, and we're gonna talk about Lisa a little bit. And so Lisa's situation is a little bit different. So our hypothetical young woman, Lisa, is somebody who became disabled at the age of 30 due to a car accident. And as we know, any one of us are only a millisecond away from being in this situation, right? And so like Sam, she currently has no earned income. She may have at some point in time, but she has no earned income now. She does live independently, and she's receiving SSI and Medicaid. So let's just talk in general terms about what are the planning options do Lisa's parents or grandparents have for helping Lisa out? What can they do to set things up for Lisa?
Okay, and thank you, Jonathan. So in this situation, because the fact pattern states that Lisa acquired her disability at age 30, she is not, a stable New Hampshire account is not available to her. One of the caveats or one of the necessary components of opening up a stable New Hampshire account is that the onset of the disability must have occurred by the age of 26. We get many calls on this, and there many questions are asked if that age limit will ever go up. At this point, it is not. However, there is active discussions at the federal level to raise the age to age 45. Nothing has been passed yet. We're not sure it'll be in this federal legislation session. However, there are some strong advocacy groups at the federal level trying to have what's known as the Able Adjustment Act, so that it will encompass individuals with post-traumatic stress disorder, veterans, individuals who are in automobile accidents, for instance. So unfortunately, Stable New Hampshire doesn't apply, and I'll turn it over to Ann and Judith.
But all the other available options
Yes,
are.
that's right.
That's the primary point of this, of Lisa. That's why Lisa was used here today.
Yeah, and so I think it's really important for folks to to understand that the options are a little bit different if you've acquired your disability after the age of 26. But really, the only one option that really clearly drops out of the picture right now is the stable New Hampshire account. But special needs trust can still be set up.
Buying non-countable resources for yourself, spending the money.
Right.
Yeah. And I did want to also add, you don't have to open up the account by age 26, so long as you can certify that the onset of the disability occurred by age 26, then you can actually open the account up after age 26.
That's really
that's
an important point.
We should piggyback on that too a little bit. The act of self-certifying for the purposes of owning a stable NH account don't mean that either the beneficiary with the disability or the parent, guardian, or power of attorney who's opening the account has to submit any type of doctor's documentation to the stable operations in Columbus, Ohio. Nothing has to be submitted to Chuck and myself as co-administrators of the program. self-certification simply means that that the documentation that attests to the fact that the onset of the disability occurred before age 30 is in the records of the individual. I'm sorry, excuse me.
Yeah.
We were talking about someone with a disability. Yeah. So the onset occurred by age 30. Sometimes the symptoms don't even show up. I'm sorry, age 26. I'm sorry.
I didn't want to call you.
Paper lock. The onset of the disability occurred by age 40, 30. Now it's just being tongue-tied. Occurred by age 26.
For our listeners today, we will be editing this portion.
I'm sorry, age 26, the onset. So sometimes the diagnosis doesn't occur until after age 26. Sometimes with mental health issues, the symptoms don't appear until after age 26. But as long as there's medical documentation that's held in the records of the individual with the account, that again attests to the fact that the onset occurred before age 26, that is what self-certification consists of.
Does the individual have to be on SSI or SSDI?
They have to be eligible to receive those benefits. Thank you, Ann. They need to be eligible to receive either SSI or SSDI, but they do not actually have to be receiving those benefits.
Yeah, so you were talking about age limitations for stable, and there are some other age limitations for self-settled special needs trusts as well. We were talking about Lisa being 30, but if Lisa was 67 and got into the car accident, there's an age limitation for funding assets into a self-settled special needs trust, and that age is 65. So there's different types of special needs trusts, but 65, just keep that on the radar. So I mean, some options do fall off.
And when people become disabled, affects other things as well. You know, so, and I mentioned it real early on, the child disability benefits, when you're riding the coattails of your parents' work history, that disability has to have arisen before the age of 22. So,
So it's really important to understand what those limitations are.
Well, and I think this is just, sorry to interrupt, John. This is also another juncture to indicate how important it is to get individual, customized legal guidance, financial guidance. And again, everyone's situation is unique and has a little bit of a wrinkle that's different than the next person. So it's very important to seek the counsel of people who are qualified to really dive into those details and give you a solution and tools that are customized for your situation. Sorry for that interruption.
That's not a problem at all. So I think we have time for one more in-depth scenario, and we're going to talk about Lucas today. And so our hypothetical Lucas is 8 years old and has a disability since birth. He lives at home with his parents and siblings. And Lucas has primary health insurance through his parents' employers, but he's also receiving Medicaid through the Home Care for Children with Severe Disabilities option, which is more commonly known as the Katie Beckett waiver from the Medicaid program. And so we wanted to sort of explore this kind of a scenario because we know a lot of the families that may be listening today have younger children who are receiving services, or maybe service coordinators listening who are working with families with younger kids, and want to make sure that we understand what are the planning options, what are the resource and income options, and what are the savings options when somebody's a young person and thinking ahead about their future needs. So let's start with the first question here. Let's imagine that Lucas's aunt would like to gift him $30,000 so that it can be used for a variety of his needs. What are the options that she has, and how are they going to affect Lucas's eligibility for Katie Beckett Medicaid benefits?
well, if the first hypothetical is that the aunt decides to put the money into a traditional savings account, so it's not a stable NH account, just a traditional bank account in Lucas's name. So the funds are going to be considered countable resources to Lucas. The initial receipt won't disqualify him for Medicaid, but if they remain in his name in the month following receipt, then they will put him over the resource limits. So the initial receipt doesn't affect the Medicaid. It's having it afterwards that will affect his eligibility for Katie Beckett, and he'll lose those very important benefits.
You know, in moving forward, thank you, Ann, with assuming that Lucas's parents, as individuals who are able to open up a stable New Hampshire account on his behalf, so long as they've created that stable New Hampshire account, and again, we're talking $30,000 here, they could immediately deposit $15,000 as part of the annual contribution, so long as it hasn't already been met, directly into a stable New Hampshire account. Again, when Bill and I are explaining really the true benefits of the Stable New Hampshire program, this is where we see it with Stable, because again, for years, parents have told their siblings and their loved ones and their grandparents and friends, don't give him any money, he can't have any money. But this is where we see it alleviated with a Stable New Hampshire account.
And again, as we've talked about already, Chuck, the payment into that Stable NH account is neither income nor a resource, and Lucas will still be financially eligible for the Katie Beckett benefit. And as we've talked about, again, we've hit the theme of qualified disability expenditures a couple of times, but you know, Lucas is 8 years old. Up until now, we've been talking about adults. So some of the things that would be beneficial and really in the spirit of the federal legislation would be qualified disability expenses would be the type of music therapy or assistive technology or specialized medical equipment. Again, certainly education. If you needed a tutor for certain things, the cost of the tutor and the curriculum that he receives could be paid for out of the Stable NH account. So Lucas's parents have done a wonderful thing for him. They're very responsible, and they're to be commended.
Yes,
for having opened up the Stable NH account for him. And hopefully, again, if they were close to the $15,000 deposit limit for a particular year, well, as soon as the calendar turns over to January 1st, the deposit bucket opens all up again, and there's room to put $15,000 in again. Sorry, Chuck, go ahead. You were going to add something.
No, I was just really looking at the qualified disability expenses. When Bill and I are on the road, there are many questions from parents as to what they can spend the money on. We've heard from the road that if a parent has a child with autism, and certain CDs actually assist this child with his disability, again, qualified disability expense. We heard from a father who has one of those miniature trampolines or small trampolines, like a rebounder, that his child uses, and it's a child with autism, and it assists her. So again, we're looking at that broad explanation of what a qualified disability expense is, and again, the benefits of a Stable NH account.
And how
So
about
if
a third party?
Well, if Lucas isn't at a December, January time frame to put $15,000 into the Stable and wait just 30 days and drop it in the beginning of 2020, that $30,000, she can't use Stable for the entire thing.
Right.
So she has some choices. And if people have already contributed to Stable, she might not be able to put anything into that Stable account if Lucas's parents have already made contributions. So, a third-party special needs trust, either one that she creates herself or one that she's willing to contribute to, can receive that $30,000 or a portion thereof. And then it can be used for the same types of expenses that Bill just described. Anything that's really there to improve the quality of life of Lucas that isn't going to be paid for by the public benefits programs that he's on. And that's a pretty broad scope of things. Those public benefits, they're there for essential supports, but there's so much that rounds out the quality of a person's life.
So, I was going to say, these are all, and thank you for that, Judith. These are all very powerful financial vehicles. These are very powerful concepts. And if those who are listening only take away one thing from what they're hearing today, it should be that it's not either or. It's not I should have a stable account or I should have a special needs trust. It's recognizing that these two vehicles really sort of reinforce and support one another, and they provide what I would consider a very well-conceived, comprehensive financial plan for someone with a disability to provide for the best quality of life by taking advantage of the different vehicles that have been made available. And particularly in the case of Stable NH, which only rolled out 5 years ago. It doesn't seem like 5 years, but 5 years ago, it really has changed the landscape. So we're really delighted Chuck and I are delighted to be able to partner with Ann and Judith and share this information about how these two vehicles really do work in concert.
Well, first of all, I want to just sort of thank you all for, I think we really covered a ton of ground today. And hopefully for those of you who are tuned in, these scenarios really helped to clarify a lot of the questions that are very common in trying to figure out, what are the different ways that I can, improve my financial situation so that I can improve the quality of my life or my family member's life, and not put other things at risk that are really important for protection. And we think of this as like a pyramid. The first thing is like get that base established, make sure your housing is taken care of, make sure you have medical insurance, medical care, and then you want to build that next step of the pyramid, right? And so make sure that you have things that can really improve your quality of life. And we've covered a lot of really good tools to help with that. We did have one question come in from someone who was attending, and I think it related maybe to one of the earlier scenarios that we were talking about with Sam. And the question is, so in a situation where an individual with a disability is living in a family's home with other family, is there a way to establish, either through the use of a stable NH account or through a trust, a way to preserve that SSI benefit so it doesn't get reduced by a third? What's the sort of,
You have to charge rent.
Yeah.
You have to charge a proportional share of however many family members are there. So that so many people say, I can't charge my kid rent. How could I do that? But if you want that person to have a full SSI check, you can charge rent. And then, of course, you have those funds available as a parent to turn around and put it right into a stable account if you
That's
wanted
right.
to do
That's
that.
right.
That's right.
But the thing is that you have to follow these formalities. If you're not charging rent, that's free rent. That's free shelter.
Resource.
It's a
And
resource.
it's an income.
Income, excuse
Yeah,
me.
it's
Right,
It's
right, right.
income, and it
Yeah.
lowers the SSI check
Right.
month by month. So we've helped a lot of clients with just getting their rental agreements in place, and looking at what it's going to cost to maintain that place. So that's why.
Okay. So I think the point you were making at the beginning, Ann, is that it's not a heartless thing to do to, for that individual to be charged for their share of the household expenses. It's really responsible in a way that's going to allow them to get the full benefit.
Yeah. And I think it goes back to the independence also. For if it's being paid out of a stable NH account,
Right.
the independence that the individual with a disability now has.
It's
Yeah.
also just really smart, because if you're a special needs trust that has just a certain amount of money, right, you should be getting some of that money back in to help keeping it going. Whereas if you just pay all the expenses without ever charging rent, then the person gets a low check and the money's never going back in. So it's just a smart thing to
And it
do.
might help build the individual's muscles on managing finances.
There you go.
That's the piece I was going to
That's
speak
a big
about.
I think
deal
it's
right
really
now.
important.
Yes.
Financial literacy piece.
Yeah.
Financial literacy is
Yeah.
huge
That's
with that community. That's right.
But we do talk about that when we present,
Yeah.
is that those, who are able to, with the disability, who are the beneficiary of the account and are able to
And able to
administer and
manage it,
manage
right.
it themselves, are going to have the opportunity to pick up a financial literacy independence component that they might not have otherwise been able to have prior to the federal legislation.
Absolutely.
I did want to add one, if I may. There has been some discussion, and I know we're short on time, but Stable New Hampshire we did join the Ohio platform. Obviously, when you go on StableNH.com, there's an 800 number with a customer service. But what Bill and I say, and I would suggest that the individuals at this table may be able to attest to, if you have any questions when it comes to Stable NH, call either Bill or I, and we will ensure that your questions are answered. And I know
He's absolutely right. Ann and I have picked up the phone, and frankly, Bill and Chuck have been really generous with their time for a particular client. And actually, we're conferencing in the Ohio folks to make it happen. And it was just wonderful to have that accessibility. So thank you.
Well, thank you, and thank
I
you
have
for
an administrative assistant, so my calls don't even get screened. If I'm not in the meeting, I will pick up the phone.
Yes, this is true.
Well, that's a really great way to sort of recap where we are today. These tools can work in partnership because we all want to be in partnership to help individuals with disabilities live the best quality of life, according to their terms, and to have the resources available to do that. So again, I want to close by thanking all of you for your collaboration in putting this information together. And for our listeners, just so you know, this panel has evolved over the last couple of months with a lot of planning and discussion, and sort of thinking about how we can get this information out to you in a way that's really digestible, usable, and helpful. So I want to thank the four of you, Bill, Chuck, Ann, and Judith, for all of your work and for the information you shared today, and for Heather for coordinating all of our efforts to make sure that we could deliver this content today. And to you, our attendees and our listeners today, I want to thank you for tuning in. I want to remind you that we'll be sending out a link to a survey. We hope today's webinar was helpful to you, and please let us know your feedback as well as any ideas you have for future webinar topics. You'll see an email from hyoung@csni.org. And lastly, this session was recorded today, and we will be putting it up on our website. Again, that's www.csni.org. And we hope you'll revisit the content or check out some of the other webinars that we have there. And stay tuned for announcements for upcoming webinars late June or early July. So I want to thank all of you for tuning in. And again, one more thanks to our presenters today. Hope you all enjoyed it. And please check us out at csni.org. Thank you.